Welcome back to the channel. In today's video, I am going to share with you my top 8 picks for Chinese tech companies, what I'm calling the Magnificent 8 tech stocks in China. This is my Dragon portfolio, the best companies to own in China. China just released their fiscal and monetary bazooka, and the market is on fire. Is it too late to invest? Which companies would I invest in if I was choosing companies in China? Well, that's what we'll cover on today's video. Hi, I'm Delta, an economist with over 20 years of investment experience, here to help you become financially independent like I have. In today's video, I will cover these 8 companies: Alibaba, Tencent, Baidu, JD, Pinduoduo, Xiaomi, NetEase, and BYD. I will briefly touch up on what these companies are, what they do in China, their US counterparts. In today's video, I will do a deep dive into Alibaba and Tencent, and then I will do follow-up deep dives in the rest of these in the coming videos. So make sure to like and subscribe so you don't miss any updates in the Dragon portfolio. Also, make sure to stick around to the end of the video for your Moment of Zen, a rap song about this portfolio, created by yours truly. Let's jump into it.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
So here it is, my Dragon portfolio, or the Magnificent 8 Chinese stocks. Starting off on the top left, we have Alibaba. You might be familiar with this one. I've covered it before on the channel, and I currently have options that are at a $100 strike that expire in March of next year, and also in January of 2026 that are deep in the money at this point. My option strategy there was to buy a bunch of these options and make a lot of money. So far up 500 or so percent, so strategy is working. Idea was to get a 10x, so halfway there. First one is Alibaba. This is a Chinese e-commerce titan. Think of it as Amazon of China. Alibaba operates an online marketplace, Taobao and Tmall, but they also have a massive cloud computing division and a growing presence in the digital entertainment industry and logistics. Just like Amazon, Alibaba dominates nearly every aspect of the digital economy. The US counterpart here is Amazon, but unlike Amazon, Alibaba has a lot of growth left in the underdeveloped regions of China and Southeast Asia, as well as explosive growth of their cloud computing division, Alibaba Cloud, which could be a major profit driver in the coming years as AI grows. When we talk about AI, there are US hyperscalers that are shoe-in winners like Amazon, Google, Meta. They have spent hundreds of billions of dollars on infrastructure for AI, and they have a lot of data. Well, in China, there are a few likely winners as well, and we will cover those. Next one is Tencent. Tencent is synonymous with social media, gaming, fintech. The flagship app is called WeChat. This is a super app handling everything from messaging and social media, payments, e-commerce, and also it's a powerhouse of gaming with stakes in Epic Games, Riot Games. They had a big stake in Activision before Microsoft bought them. Now, Tencent is often compared to Meta, but what sets them apart is Tencent is obviously in China, and it has more of a payment. They're like WhatsApp app, WeChat is like an everything app, and you also have ability to pay. There's almost nobody in China that doesn't interact with their apps, especially for payments or gaming. Now, Tencent is perfectly positioned to benefit from 2 booming industries, gaming and digital finance. And most importantly, their investment portfolio makes them like investing in a hedge fund. They have over 700 investments, and even just their top 100 are extremely impressive, like Tesla, Snapchat. They had a stake in Activision, Spotify. We'll jump into more of those later on in the video. We'll focus on Alibaba and Tencent today. We'll just briefly touch on the other 6. Next one is Baidu. Baidu is often referred to as Google of China. Baidu is a leading search engine in China, but they also are heavily involved in AI race. What's exciting about Baidu isn't just the search engine dominance, but also their pioneering role in autonomous driving, sort of like Google is doing with Waymo. Autonomous tech giants traction, Baidu could become a leader in one of the most transformative industries of our time. Next, we have JD.com. JD.com is a major player in e-commerce, logistics, and smart supply chains in China. JD's value proposition is similar to that of Walmart or Amazon, and it focuses on direct sales, cutting-edge logistics, including drone deliveries and fully automated warehouses. JD's competitive edge lies in their advanced logistics infrastructure. As they continue to innovate in their space, they will continue to dominate in the e-commerce market in China and could expand their logistics even globally. With the recent stimulus, if the Chinese consumer strengthens, then JD will be one of the biggest winners in this portfolio. Next up, NetEase. NetEase is one of the largest online gaming companies in the world. From mobile to PC games, NetEase has created some of the most popular titles in China, has a growing presence internationally. This would be compared to something like Activision Blizzard, which is now part of Microsoft. What's exciting about NetEase is their expansion to new markets and ability to continuously release blockbuster games, riding the wave of global gaming boom. Now, if you're not familiar with the gaming economy of the world, it's one of the best and fastest growing economic drivers in entertainment. Though NetEase has suffered from regulations in China that limited people from playing, especially young. Next up, Pinduoduo. Pinduoduo is a unique e-commerce platform where users team up for discounts. There's a gamified function of it. It's sort of like Groupon meets eBay, and this is a social platform that has exploded in popularity in China and has an interactive experience. Have you used Temu? Well, guess what? Pinduoduo owns Temu. It is growing very fast and is expanding internationally. Next up is Xiaomi. Xiaomi, if you're not familiar, is one of the world's largest smartphone makers and a leader in smart home devices. Think of it as Apple of China. Xiaomi's ecosystem spans smartphones, TVs, wearables, IoT devices, and they also make batteries for cars. There is a consensus that as far as it comes to phone batteries and devices, they are the best. I had a Xiaomi phone before this one, and it would charge to full in 10 minutes, from empty to full in like 10 to 15 minutes. My current takes like an hour and a half or two with fast charging. My Xiaomi had a 120 watt charger, and it would charge insanely quickly, and the battery would last all day. So even if they fail at making smartphones, in my opinion, they're the best battery producer. They make high-tech products at affordable prices. They're rapidly expanding to Europe and emerging markets, and they're well-positioned to compete with global giants like Apple. And last one is a company I've covered before, comparing it to Tesla, is BYD. This is a major player in electric vehicle, batteries, renewable energy, and often it is compared to Tesla of China. But it's unique that it also manufactures their batteries, it makes electric buses, powers cities across China. BYD stands for Build Your Dream. Guess what? Some of batteries used in Tesla cars are made by BYD. So they're more vertically integrated than Tesla themselves. They produce more cars. And when you look at the financials between BYD and Tesla, which I've done in one of my previous videos, check it out, they look oddly similar in how much revenue they're making and how much profit they're making, but BYD is valued 10 times less than Tesla. Is there an opportunity here? Yes. What is the difference? Well, Tesla is more profitable per car than BYD. BYD is definitely undercutting most of the global producers when it comes to electric cars or hybrids. If you haven't seen a BYD car, check it out. They make some amazing cars. I've seen these cars in Latin America. I've seen it in Europe. I don't think they're allowed to sell in the US because we have insane tariffs and we want to protect Tesla. There you have it. The Magnificent Eight of China, as I'm calling this, the Dragon Portfolio. I will do a deep dive now of Alibaba and Tencent. Not the deepest dive, but a quick overview of how I analyze these companies and why I think they're undervalued. If you watched my best ideas of 2024 portfolio, where I included KWEB, which is a China Internet Stock ETF, which is up 50% from the time I included it a couple of weeks ago, you may feel like you're good. You made your 50% on the Chinese liquidity bump. But I think there's a lot more growth left in Chinese stocks, even at current prices that have gone up a lot in the last couple of weeks. When we look at the valuations, these companies are high-tech growth companies with double-digit growth numbers that trade currently like value stocks. Let's jump into, first of all, Alibaba. As you know, Alibaba is one of my investments that we bought options for, planning on a 10x return from the time we entered the position at $70 and $80. It is trading today at 117, which means our options are in the money by a lot, probably 500%. Also means we still expect it to go up another 500% for us to make our 10x as the strategy was planned. This would be about $160 to $180 a share. Here is a quick overview of the financial highlights for Alibaba. This is Q2 revenue. You can see they made $33 billion. Their adjusted EBITDA is $6.2 billion. Their net cash position is $55 billion. They're sitting on $55 billion. Their cloud is growing at 6%. Double-digit growth on different things from Taobao and Tmall, and international digital commerce continues to achieve robust revenue. This is really interesting right here. Repurchase. So I just told you they have close to $60 billion they're sitting on. They have an approved buyback package of $26 billion, and they have been buying and buying $5-6 billion worth of repurchases, which is basically returning value to shareholders. If they give you a dividend, you have to pay taxes on it. If they buy back shares, they just make the value of their company go up per share basis, and you get to capture that as a shareholder without incurring taxes. We like this. So Alibaba makes money from 7 different categories or divisions. First, Taobao, Tmall, this is retailers and wholesalers, 1688. Cloud Intelligence, Alibaba Cloud. Alibaba International Digital Commerce, this is retail like your AliExpress, similar to Temu if you've used it. Trenadol, Lazada, Daraza, Miravia, and wholesale Alibaba.com. Next is their Smart Logistics Network, their local services group and deliveries, digital media entertainment group, and all others. Now let's take a look at their finances. The financials are amazing. First of all, worth $281 billion, but they're sitting on $60 billion of cash. Let that sink in. The price to earnings growth is sub 1, which means it's growing insanely fast. The forward price to earnings ratio is 13. This is like a value company. Trailing is 28. The profit margin is 7%, operating margin 16. The revenue is close to $1 trillion, of which They got 70 billion of net income. Everything here looks amazing to me. Next up, Tencent. This is one of my biggest holdings in my portfolio. I've had it for a long time. And the reason is right here. When you buy Tencent, you're buying all of these companies, including some that are on our Magnificent 8, like Pinduoduo and JD. But you're also getting some Tesla, some Snapchat, some Spotify, Epic Games, NBA, lots of others. Why? It's like buying Facebook. So you get Facebook, you get Instagram, and you get WhatsApp. Except WhatsApp has built-in payments that everybody in China uses. And on top of that, you're getting a portfolio of over 700 investments like these. Now, Tencent's core businesses are payments, subscriptions to video and music, social ads, media ads, games, and cloud. Here's some of Tencent Investments portfolio. Epic Games, Ubisoft, Activision, Riot Games. That's just gaming, okay? Activision, obviously, Microsoft bought from them. UiPath, Roblox, Snapchat, Discord, JD, Pinduoduo, Tesla, Neo, Diddy. But there's more. Spotify. This is like buying an ETF of amazing. So if you're going to buy one company, this would be one for me in China. Their financials, gross profit, 85 billion, 160 of revenues. 2% growth quarter over quarter. Their earnings per share grew at 14%. Their revenues up 7% year over year. Gross profit up 22%. Operating profit up 39%. Profit for the period up 70%. Attributable to equity holders 72%. Earnings per share growth 75%. Are you seeing this trend? This is a fast-growing company. The total revenues last quarter were $22 billion. Gross profit was $12 billion. Year over year, 51% growth in profit. Basic earnings per share increased. Operating margin increased. Total cash. Their total cash is also almost $60 billion. Free cash flow, $10 billion. Net cash position, $10 billion. They're repurchasing shares. Are you seeing a pattern? These Chinese tech giants are sitting on mountains of cash. They're buying back shares. When companies buy back shares, stock goes up. Let's take a look at their financials. Up almost 3% today. Market cap of $565 billion. Price to earnings growth 0.7. Also cheap. Forward PE is 17. Also cheap. Revenue $630 billion, of which net income is $152 billion. Profit margin 24%. Operating margin 31%. Quarterly earnings growth 82%. These are just amazing numbers. So, what are we going to do? We are going to construct a portfolio. Oh, guess what? I already did it. This is my Magnificent 8 Chinese stock Dragon portfolio. We have Tencent, BYD, NetEase, Xiaomi, JD, Baidu, Alibaba, and Pinduoduo. I bought them today at market open, and the portfolio is up only 1%. Almost. We can rebalance this to have equal weight. So let's see. The most expensive one is Pinduoduo, $150. So if we just spend $150 on each company, will give us, what is that? It'd be like $1,200, right? So about $1,000, $1,200 portfolio of equal weight, $150 per company. and we can keep an eye on this. The Dragon portfolio has what I think are the best 8 companies in tech in China. Now, they're up a lot off their 200-day moving average. NetEase is single digit. Everything else is double digit. Some are high double digits. Alibaba, obviously 50, up 50% off their 200-day moving average. Xiaomi, 60%. BYD, 50%. And so on. Biggest gainer today is Xiaomi and BYD. There's never a need to FOMO in. There's plenty of time always. And markets are rarely straight up. If you look at the Chinese market right now, it is a vertical line up. And those things don't usually work out like that. Now, is this a good time to buy Chinese stocks? It's kind of relative. The ETF I recommended a few weeks ago is up 50%, and so are a lot of these companies. They are trading at their 52-week highs, often up 100% from their 52-week lows. Despite that, their valuations are still very attractive. They're trading like value stocks, but they are high-tech growth companies with double-digit growth. They're still undervalued in my opinion, but there's no need to FOMO in and just buy blindly. You can start a small position, watch your position sizing, and dollar cost average in over time. Maybe buy one of these companies per week, whichever one looks most undervalued, or buy one share of each and then add each week, especially if there is a pullback of 5, 10, maybe 20%, may be a time to add to those positions. Personally, I've owned Tencent for a long time, and when I don't have any good ideas of what to invest in any 1 week or any month, I just buy Tencent, because buying Tencent is investing in an amazing company, a tech giant in China, plus their portfolio of 700 other investments. So it is like investing in an ETF. From my perspective, it is a safe bet on China. Like buying an ETF, except more concentrated. You're buying a leader. Also, China is catching up on their AI innovation. There are rumors that they have copied or innovated on ASML's technology for building advanced microchips for AI. China has a lot of data and they have a lot of engineers. Also, they have a lot of nuclear power. So they have the data, they have the engineers, possibly the technology to make microchips, and they have the energy to support large data centers that would use AI. Some have argued that China is behind the US by a year or two in the AI race, but given their advantages, they might be able to catch up. And if they do, the likely winners are some of these companies in the Dragon portfolio. If you're betting on AI in the US, it may not be a bad idea to hedge your bet and also bet on AI in China. And there you have it, the Mag 8 Chinese stocks, a group of companies shaping the future of technology, e-commerce, and innovation. These companies are not only dominant in China, but are also making waves globally. If you're looking for growth opportunities outside the US, these stocks are definitely worth a closer look. The Dragon portfolio will be updated from day to day and weekly. We will do check-ins, so make sure to like and subscribe if you appreciate what we do at the channel and if you want to stay up to date, latest in Chinese stocks. I don't get paid for doing this. I do this for likes and subscribes. So make sure to like and subscribe. It really helps out the channel. I appreciate every one of you. And here you go, your moment of Zen. And may the force of compound interest be with you. Peace.
I make the move now, watching it grow, no slowing. Invested in a dragon, now my wallet's overflowing. They doubted me back then, now they wishing they had shown. Vision is between nobody else ever known. Speaking truth to power, this is the hour. Turning cents to dollars, feeling like a scholar. I might just devour, rising like a tower. Trying to simplify it to financial wealth style. Double digits, years and money on a mission. fruition. Winning through persistence, I trust my intuition. Chasing with ambition, never ride fashion. This week throw me lap, and I'm basking the passion.
Peace.